Welcome to the final session. And what is going to happen now kept me actually in suspense because about, I think it's almost, it's a year ago, many of us were in Dubai. And we all met Tony Lithgow yesterday morning. And he got up on the stage in Dubai and sort of made an earth-shaking statement. He had a picture of a meteor striking the Earth. And he talked about a theory called punctuated equilibrium. And what he really said is, if you people down in the hall are not changing your business model, you're going to be doomed. So those people who were in the room, who just had built a credit bureau, were horrified. And others, they were asking question, why? And basically it's the fact that there is something coming that dramatically is changing the banking system. And we all depend on the banking system to pool data. And if the banks do less lending, then we have less data. And FinTech is not using credit bureaus, some do, but the most of them don't. And then you got a lot of, instead of information pooling, you got fragmentation. And yes, some people think FinTech is ready for a shakeout, but it doesn't look like it. I also read a study by Accenture which said something to the effect like 28 to 30% of the banking lending will be out the window. So I called my daughter. She's a partner at Accenture in London, but she's not responsible for banking, she's responsible for mining. So knowing she can dig, if you're mining, you have to dig. I said, dig deep in your organization to find me the right guy. And nothing happened. You know, daughter says, I'm low priority. There's a firewall. So what? So anyway, I reminded her about 6 times. She came back. I said, I found the guy. And here he is. Please meet Alex Trott, he's managing director of Accenture. And he's responsible basically for the Greater China retail sector. And I gave him a big briefing about Lithgow's paper about punctuated equilibrium, and I said, well, we'll give you please give us some additional insight. With that, welcome Alex Trott.
Thank you very much. Quite an introduction. I've got a few slides to take you through today, and a little bit of a point of view around FinTech and some of the impacts that's going to have on the banks, on the financial services industry, and in many ways all of our organizations. So as a consulting organization, as a technology organization, we are being disrupted by FinTech. The banks are being disrupted by FinTech, and the whole move to digital and a lot of digital trends. So I wanted to spend a little bit of time just talking about that and some of our point of view on the sort of strategies that we can all use to think about the impacts of these trends and the impacts of FinTech on us and as organisation. So yes, my name's Alex Trott. I look after our distribution and marketing services business within Accenture. That fundamentally looks at, fundamentally works with banks, fundamentally works with or banks, insurers, other financial services clients across. My role is across Asia, and really looking at how these organizations interact with their customers. So how do they build up a picture of their customer? How do they actually create the right products, the right services, and actually then how do they do that? Look at that interaction. So that's the area of the business that I'm looking after. And as alluded to, And this was a study that we carried out a few years ago, which actually got a lot of got noticed significantly by the banks, was actually how much of their revenues is actually at risk through some of these startups, through some of the disruption. And as always, you can use statistics to create what you want to, but if you look at those areas that are actually quite simple for some of these organizations to disrupt, it's actually the core of a number of the areas of the bank. So the deposit and current account area is one of those areas that is actually quite simple to disrupt. And actually, through some of the players that you'll, I'm sure, be aware of, Simple, Moven, some of those other players, that is really making a difference. Now, when we did this, payments probably wasn't quite such a large area, but over the last 6 months, the trends with blockchain that you're seeing, and some of those other technologies making a massive difference in payments, especially. And the whole question around credit cards and credit in that space, I think, is being will be moved, and payment cards through mobile payments will be have a massive impact as well. So across the whole value chain, across the whole product set, there's significant impact to organisations. And if you look at the trends are just exponentially sort of growing. So the amount of investment in fintech, for example, 2014 was around 12 billion. That will probably double, triple this year as well in terms of the figures around that as well. And what's interesting from this, two points that again came out from some of our research, was that whilst the amount of investment increased significantly last year, the number of organisations that investment went into did not increase quite so high. So in terms of the deal volume versus the actual value, which means that these fintechs are growing. It means that the amount of investment in individual fintechs is growing significantly. And there are a number of these that are getting not just $1 million, $2 million, $10 million here, but hundreds of millions of investment in these platforms and in these areas, which are making a difference. And then if you ask the organisation, so if you ask the banks or the insurers or whatever, do you have a strategy to combat that? The response is, and these are self-referred, so actually nearly 70% of those said they had a fragmented strategy. And there's not many of them that will admit to those types of numbers, but 70% had a fragmented strategy around digital innovation and fintech. And that's across a number of areas, whether it be that technology, be that some of the cultural challenges, talents and skills to react to that, and actually some of the biggest challenges around culture and skills in terms of being able to respond to that. And I've seen, again, fairly recently, there was an investor day where the CEO was sitting there, and a number of the one specific question came out was, could you explain please your digital strategy or your strategy around innovation to combat these disruptors in the market? And clearly he hadn't been briefed very well, and started to talk a little bit about their new internet banking or app or something like that, but again missed the big picture around this, and was and again that was pulled up very significantly in the press. And I think the key thing around strategy and responses to this, and this goes again for all of us, this is not about digitizing, or this is not about thinking about our existing business in a digital way. This is about thinking around the new businesses that are going to exist because of these new technologies and the new things that are coming along. So it's very much about a new strategy that's based on these aspects, not necessarily just using digital within our existing businesses. So if you look at the landscape, there are thousands of fintechs around, and what I like about this slide when it was put together, the little piece down in the bottom corner that says not exhaustive, whereas actually there's a large component to this. And a couple of observations here. Again, I'm not going to walk through every fintech on the slide, but what I'd say is they group into various components that interact. So what you're starting to see with the fintechs is not just individual pieces, but actually they're starting to create connections between each other, and they are working together to create ecosystems, to work together, again, to work in a different way to many of the traditional organizations. So how some of the trends around shifting customer preferences, working with some of the other payment aspects, and again, it's a series of trends that are fueling the development of this industry. So again, one of the responses to that, and again, one of the things, how are we involved with this? Very much is creating a fintech program which bring together the financial organizations, so some of the key organizations, with fintechs. And there's two things there. One is it's basically to get the banks out of their current thinking, to think about how to interact with these organizations, and to create a way of interacting on a very small scale in the scheme of things around fintech and in that area. And what I think that starts to say, and what many organizations start to realize, is this is a different way of thinking. And what I want to talk about a little bit is how some of these different ways of thinking and some of the responses that are coming out from the banks are coming along. So why are fintechs being successful? So why is there a market for what they're doing that there wasn't before? And I think it's around the consumer and what the consumer is used to now, and how that is again driving some of these trends. So you look at, in my mind, two different types of fintechs. And I'll talk through a couple of examples in a moment. One of the very small, sort of, as we call piranhas, that are out there that are saying there's a piece of the value chain that these financial services organizations are looking at, and we can have a bit of that. We can talk through, we can sort of work out how we can disintermediate around very specific propositions and make an inroad into that. You then have the very large digital leaders that play on the consumer challenges and the consumer changes, and those are the ones. These are the Apples, the Googles, those types that are starting to say, we own that customer relationship. We know what customers and consumers are looking for. Let's get into banking. Let's get into some of these financial areas. And whilst those are big examples of, and again, big global examples, there's some really interesting Asian examples, especially in China, where these internet giants are taking over, again, a whole area of value chain around in the financial services space as well. So a couple of examples. From our FinTech program last year, we had two piranhas within there, let's say, and I just wanted to talk a little bit through that. So, and these are, there's no reason I pulled these out. They sort of typify some of the trends. So AMP is a credit that offers end-to-end credit services fundamentally, but they look at it and they offer a standalone front-to-back credit solution. And what it is so they can look at they will manage this on behalf of a bank to look at targeting, lead management, looking at the origination, the credit scoring, looking at the servicing of those, the collections, and then the reporting of that as well back to the bank. So they don't have a lending license, they don't use their own license, they do that in conjunction with another organization. But why is this different? Why is this different? It's because of the fundamentally around the credit is a longer change curve for things that are happening. However, there is a need to think about how you can combine the risk profile and the ability to change faster. And what I just want to touch on, I suppose, over again a couple more minutes, is how to respond. And I've sat with a number of organisations, and again, some of the large banks I've asked the question, well, what do you need to do in this new market? And had some very interesting responses, especially around regulation. And I think there is and hopefully this is not playing out, but again, a number of organisations that have sat there and said, the regulator and the regulation will protect us as big organisations. And actually it's the opposite, because what we are finding is that these other organisations are finding ways, not around the regulation, but again to work with it in new ways, and to work with other partners just to offer better services in a different way. So I don't think regulation is going to save them. I also don't think that the fact that, well, these fintechs are small and insignificant is going to save them either. Because again, you just look at the growth of these and the ability for, with the type of investment going into those, for the ability of these organizations to respond very quickly and to grow and scale. So maybe I'll just flick through a couple of things. So where do we get to? And what we spend a lot of our time doing is, again, working with organizations to say, what do you need to do in response to this digital disruption or this fintech disruption? And our key sort of premise around this now is a two-speed agenda. And it's a very simple concept, but it's very difficult to implement. So how do you create options in the market? How do you learn? How do you think about innovation? And how do you apply that to your core business, your legacy business? So how can you do that? And I think the key thing here is it's easy to set up a standalone digital practice or R&D that does things and creates new ideas. But if you don't have the ability to apply that to your core business, you will never use that in the right way. And it's the way in which you can do that. And again, what I want to talk about is a couple of strategies for doing that. So again, different ideas, different vehicles across different ideas. So R&D, so you can create your R&D. However, do that with partners and do that in conjunction with other people in the ecosystem. Look at strategic investments, so look at some of these things in terms of, well, actually, is there something out in the market that actually I can pull in? Again, looking at venture funds, looking at innovation, working with incubators, working with accelerators. So again, getting any organization out in the market through these innovation vehicles around that. One interesting strategy that I think isn't always successful is around the venture funds. And my, again, personal view around some of that is that organizations have said, we need to get into fintech, let's invest in it. But actually the investment gets clouded by the desire for returns on the fintech investment versus actually using that and applying it back to your core business. And therefore these things have to work in parallel, but often don't work well together. So you can use your venture fund to learn about the industry and to learn, but you need to apply it back to your core business as well. BIIA has been, again, across these things, and has been an organization that I think has been at the forefront of this, both in Europe, in the US, across these open innovation programs, ventures, internally, so creating internal ventures, creating ventures with other partners, starting to open up their technology through APIs, through different ways into the market, and also into buying these things, buying other, again, an organization called Simple, which again is a digital bank offering basic banking products. And what they are managing to do through this is look at how to create options focused around the customer, focused around digital, focused around the new ideas, and actually then moving that into their core branch, into their technology platforms and those areas. So finally, I suppose this is not easy to do, and for all of us as organisations, we have to put in place the right pillars, building blocks, whatever you want to call it, in terms of building up a business that can work at two speeds. It's around governance, so it's around thinking about how your legacy business works, how it works with your innovation area, without stifling it, but creating a symbiotic relationship there. IT architecture, you will always have, a lot of these organizations will always have large legacy systems. How do you create options around that through new technologies, again, working on the option side? How do you take, some characteristics around digitization, again, making your operation end-to-end just more straight through, more automated in those areas? And I think fundamentally, the key to all of this is around the people and culture. And I think it's about not having 50 people in an R&D area. It's not about having those sitting on one side around innovation. It's about how you bring that culture of new thinking around innovation into the core business, to think around change and realize that change is going to happen at an ever accelerating pace, and that everyone in every organization needs to be able to address that, not just your innovation department. It's everyone's job. Change is now everyone's job. And that is the balance, and that is the challenge, I think, for the organizations. Our point of view, that's what I had to share. Hopefully we may have some questions, we may have some debate. I don't know whether anyone else has any thoughts they'd like to add, or any other challenges. Please.
I want to kick off with some understanding here. We want to preserve the banks as the main contributors to our credit bureaus. Now, what's your assessment whether the banks will survive or not?
So the banks will survive if they change. And the key for this, in my mind, is back to strategy. So where is your strategy as an organization and as a bank? Do you want to be a product manufacturer? Do you want to just create product and sell that through others, and again, distribute that through other channels, through other partners, and those things? Do you want to be core in the ecosystem of the consumer ecosystem? And the challenge for banks to do that is, how do they do that? How are they relevant on a day-to-day basis where people find them, again, through mobile payments? How can they be involved in that, where actually there is no necessity for a bank to be involved in a number of those aspects now? So I think it is about banks working out where they play in the new ecosystem, the financial services ecosystem, which is being significantly fragmented, but working out a key strategy there.
Well, I'm afraid that the banks will be like the turtle, slow, and the others are like the rabbit. And if you go to the children's story, and that the fintech people will move too fast, cannot catch up. So can we then work with the fintech people, or perhaps even with the banks working on their incubator, so to speak, to convert them to offer different things?
And I think that's exactly the challenge. The exact challenge is to say, how do they work together? How do you bring these into the organization? And again, many financial organizations think about survival by putting up walls, by creating closed networks I think the way for survival in the future is actually more around open networks and working out what your place is in that ecosystem, rather than necessarily trying to, again, put up the walls around that.
Okay, thank you. For everybody's benefit, it's a subject that's close to my heart, so I agree with everything you've done. And there is a presentation from me on the website, I think. I'm not sure if it's generally available. And the ecosystem is a good way of looking at it. I think a couple of points really. One is banks are actually joining up with some of these fintechs and lending through them. We're seeing that in the UK. So I think that's another piece that can happen. But I think the major point for this audience is that credit bureaus are, there are new models for credit bureau. I was at a convention the other week, and there's a new credit bureau. I'll blatantly advertise them, called Air.io. That's AIRE, which is seen as a people's credit bureau, which is a new fintech model which actually relies on consumers inputting their data. So, there is a lot of change going on, not just in financial services, but in our industry as well. And I won't get mad among about what's going on in China and credit bureaus there, but there's obviously a lot of that going on. So I think the other point is mentioned is that this data is actually being promoted through governments encouraging what we call APIs, which are application program interfaces, which these guys feed off of. And by doing that, they short-circuit data, or will short-circuit data that comes to the traditional credit bureaus. So credit bureaus will find themselves marginalised by APIs being sought directly from databases. In the UK government is actually told the banks they've got to produce a standard API that anybody can access with the consumer's consent. So that just gives you a flavour, I think, of where things are really going. But great presentation. Thank you very much.
Thank you. Please.
Actually, I think it draws the issue with the bureau is. So here I just would like to share my understanding about the bureau. The bureau is that a platform for the sharing of information among lenders. So I just wonder whether such kind of a system can solve this issue, share information among lenders about the indebtedness of a borrower. So if that case cannot be resolved by the new technology, I think there's still a room for bureau.
I think that's fair, and I think that in the challenge is how do you create your place in the market? And if that is through a marketplace for that information, and if there is value in that adds that over and above what any one organization, take the examples that I gave, if you can create value over and above those individuals, then there will always be space for that. And I think that as things become more fragmented and become more distributed, there will be the emergence of these common platforms or common areas where there is sharing of that type of data. You look at and that start to become a little bit more self-regulating as well. We could talk a lot about some of the blockchain aspects around payments and around some of the technologies around that. The interesting thing there is, in many ways, those things are self-regulating because there is a way in which that some of those sort of syndicates around those things are working. Now, that's got to be proven that it's successful in the long term. But again, the way in which some of those things are happening is very, very interesting. That the market regulates some of those aspects, and it's done by the members of that syndicate rather than necessarily by a regulator or by a specific credit bureau. So I think you're right. I think that as things become more fragmented, as things become more distributed, there will be roles for aggregators that can add value by combining those sets of data.
Yeah, I really enjoyed your presentation. I thought it was actually really great. I hope we get the
assessment of what they do, and their overall premise is many, especially for SMEs, and this is for SME, the SME segment. Many of the existing credit strategies around that are based on assets, are based on this. This is all based on cash flow. So their view is if we can get information from the banks, especially if they have a merchant acquiring or a merchant section around credit cards and around electronic payments, they can actually tell the financial viability of that business through cash flow. So what they do is they get access to that data. They do that on a daily basis, so they actually rescore or they look at the financial viability of that company on a daily basis. The loans have daily repayments, so the loans are repaid on a daily basis, and they continue to manage and monitor that risk on a daily basis to look at the trends. So you can start to see real time, almost, so real time, whether the company is continuing to generate the cash flow, and therefore whether they're continuing to be within the same risk bracket. And that as a standalone sort of offer, in conjunction with the banks, opens up a whole new amount of lending to banks because of the different credit rules and a segment that they probably would not have looked at in the past. So again, an interesting use of credit and credit assessment in working with the banks to actually allow the banks to get into new types of business. Another of the organisations again within our program was a company called WeCash, internet-based credit scoring in China. So their premise was there's 200 million bank account holders in China, there's 500 million smartphone users. Let's go after that 300 million, basically, that aren't able to get credit and credit scores based on that. And again, they derived algorithms around that to look at online, behavioural, social data. They are providing credit scores within 3 minutes, although that's, again, they're working on their technology to get that down much faster. And again, working with, in particular, P2P, so peer-to-peer sites, where these guys provide the credit score for around 100 RMB, which is around $12, $15 or so. And so far they've had 8 million users. The value of this company has gone significantly higher and actually is now the leading internet-based credit scoring in China. Again, using online behavioural social data. Now the loans are not huge. They're not. It's not a significant base, but it is significant in terms of the numbers, and it's significant in terms of again a whole new segment in an emerging market where the banks are completely disintermediated through that lending. And I think China is a really interesting example where the development of the new technologies, where the development of the of digital has come in a very rapidly to plug holes within the existing infrastructure in China. So you look at Alibaba, which is a fascinating, I think, case study over the last 10 years, if not even the last 5 years, around what they've done, which in my mind fundamentally offer everything that a bank offers, predominantly, to a whole number of different segments, but they're not a bank. And it's through the partnerships that they have, and again, and the customer interactions that they've got, that has really driven their success in the financial services market. So again, Alibaba was an online marketplace for buyers and sellers where there was a lack of trust generally on the internet. What this has done is they created again, a trust-based ecosystem where these buyers and sellers can work together and actually create that, which again, as soon as you start to get those financial transactions in there, you can offer a whole number of other services off the back around deposits, money market funds, mobile payments, payments platforms, those types of things that they have just created off the back of that. And what for me is interesting here is that they didn't set out with this vision. If you'd asked their leadership team 5 years ago, what was your group going to look like, they would have no idea that this was where they are. But again, their use of customer data, their use of, again, looking at the market, working out where the gaps are, based on the ecosystem that they're creating, and based on the relationships that they're creating with fintechs, with other organizations, with, in some cases, small finance organizations, and has created this group and has created this ecosystem, which again is very, very powerful. And you look at the sort of stats of the amount of the payment transactions, the scale of it is huge. And just because the scale in China is the market there is growing so fast. So what does this mean for us, and what can we learn from this? Or again, I suppose, what does this mean in the market? And in very simple terms, the change cycle, so the way in which the adoption of change and the way in which adoption of new technology has just moved to the left in terms of very, very short timeline, very, very huge spikes in terms of new products, new ideas, and that's what the fintechs are basically exploiting. They're exploiting their ability to be nimble, to react to the market, and this is the big challenge for the FS industry. Again, it's not renowned as an industry that moves at speed, not renowned, again, there's the FS industry is built up on looking at risk and adversity to risk, and therefore that generally causes
in terms of, just so I can nick them, but in terms of credit bureaus, look, let's not forget, credit bureaus are aggregators of transactional data that predicts affordability and willingness to pay for something, and wherever that data comes from, the bureau may get it from the bank. Lazy bureaus will only get it from the bank, but most bureaus are looking for other sources all the time, and these are just other sources. And if they work with the fintechs, and that's what we do, and we are a fintech, and what we do is we make sure that we aggregate that transactional data and apply it to affordability and willingness to pay. And in terms of bureaus, they are effectively all closed user groups anyway. That's what you are. You are closed user groups. You're sharing that transactional data. What you probably need to do is make sure that you have some of these Alibabas, people like that, in your closed user group, so you're getting that transactional feed as well. But don't underestimate. Don't think Alibaba doesn't use bureau data and the others, because we already sell it to them. And don't underestimate that they need to know the identity of those people, because if they don't know, it's crap in, crap out. So and you're just perpetuating fraud. So in fact, actually, everybody in here is going to make more money in the future because of the way the market's going, and you're going to have less reliance on having to be told by the banks about what you can and can't do with the data. And what you're going to be able to do is build better, more predictive scoring models. So I think it's a really, really bright future for you. I agree with everything you say, but I don't see it as a doom. I see it as a but. I see it as a.
But I think there is the opportunity. Absolutely, everything is growing, and there is the opportunity. I want to pick up on just one part of what you said around transaction data. Now, I'm not a deep data analytical expert, but again, what we're seeing is that banks starting to move, or organisations starting to move to micro-segmentation, really looking at understanding a customer, not necessarily based on their past transactional history, but actually in terms of where the predictions of what they're going to do in the future. And actually a lot of that's been driven by a desire to get to know more about the individual. I think where it's moving, and I'm sure you've been talking about this, is a move to understand more about your segment in terms of people like me, so that you can predict not just necessarily based on the individual, but based on the people that are similar and the behaviours that they have, that they exhibit, to actually predict whether whether an individual is going to be successful or, again, their credit rating.
I don't disagree. I think the only other thing you touched on, and I think the real disruptor, and it's a long way off and it may never happen, is if identity moves onto the blockchain, then you have total disintegration of the identity, and all transactions then follow that identity, then there isn't a requirement for a bureau as such at all, ever. But that is a long, long way off, and it may never happen.
Yeah, and I think there's going to be a lot of uses for blockchain that are going to be put in place before that happens, as you say. And again, it's something that needs to be proven out. But there's definitely interesting things happening there.
All good things come to an end, and I'd like to end this session on your good note, because it's an upbeat note which we all need, and we walk away with much more enthusiasm. Thank you very much, Alex.
You're very welcome.